If you think Swiss banking is about secrecy and illegal money, you are wrong. In 2026, the real advantage is not hiding wealth. It is accessing one of the most stable, legally engineered financial systems on Earth. And that system is used openly by the global elite. Here is how it actually works and who it is for. For decades, popular culture sold a single story about Swiss banks: secret vaults, numbered accounts, and hidden money. That story is obsolete. Banking secrecy, as people imagine it, ended with the Common Reporting Standard, fully implemented by 2018. Switzerland now automatically shares financial account information with over 100 countries. If you are tax resident in the United States, the UK, Germany, or most developed economies, your Swiss bank reports your account to your home government. There are no exceptions, no loopholes. So the obvious question is this: if secrecy is dead, why does over $2 trillion of foreign wealth still sit in Swiss banks? Because secrecy was never the real product. The real product is stability. Switzerland offers political neutrality, legal predictability, and institutional continuity that very few countries can match. While other systems shift with elections, inflation cycles, or regulatory overhauls, Switzerland is engineered to move slowly and deliberately. This stability is expressed through law. Swiss banking operates alongside sophisticated legal structures, foundations, trusts, and holding companies. These are not tools for hiding ownership. They are tools for defining ownership clearly, protecting assets across generations, and preventing disputes. Everything is documented. Everything is compliant. Another pillar of the system is the Swiss franc. It is one of the world's most reliable safe haven currencies. When global markets panic, capital flows into the franc, not out of it. Banking in Switzerland is not just about where your money sits, but what currency risk you eliminate. This leads to the first real truth of Swiss banking. It is not about growing wealth aggressively. It is about preserving substantial, already legal wealth inside a system designed to withstand volatility, uncertainty, and time itself. That brings us to the most important distinction. Swiss banking is not for everyone. The average saver is not the client. Swiss private banks typically require minimum deposits between $500,000 and $1 million, often more. Their clients are legitimate business owners with international revenue, global families planning multi-generational wealth, high-earning professionals with stable documented income. Their money is clean, its source is traceable, their objective is long-term preservation, not speculation. Who is rejected immediately? Anyone unable to document the origin of their funds? Anyone suggesting tax avoidance? Anyone seeking anonymity rather than structure? Swiss compliance is exhaustive and unforgiving. Accounts are rejected far more often than they are approved. So how does Switzerland remain a fortress for elite capital if everything is legal and transparent? The answer lies in jurisdictional specialization. Within Switzerland, different cantons have developed deep expertise over centuries. Zug is known for corporate and holding structures. Geneva dominates asset management and commodities. Zurich anchors private banking and finance. Clients are not buying a bank account. They are buying access to a refined legal environment. A Swiss foundation, for example, offers a level of asset protection clarity that many jurisdictions simply cannot replicate. The rules are stable, courts are predictable, and enforcement is consistent. For the global elite, Swiss banking is not a standalone solution. It is the stability core of a diversified global structure, the portion of wealth designed never to be touched, never to be exposed to political shocks, and never to depend on secrecy. And that leads to the final clarity. Swiss banking is not a hack. It is not fast. It is not cheap. It is the deliberate legal process of converting liquid wealth into institutionalized capital, protected by law rather than discretion. So is this system for you? For most people, no, not yet. Not because it is forbidden, but because it is designed for a specific stage of wealth. This video was not an invitation. It was a demystification. High finance runs on stories. Some are myths, some are truths. If you want to understand how another system, like Singapore's, competes with Switzerland using an entirely different logic, subscribe and comment on the next country you want analyzed. The next system does not work the same way at all. I will see you in the next one.